Hi guys, this is Dan with Index Option Trading on May the 10th after the market close, and we start off traditionally with the chart of VIX. This is VIX 1-year chart. Take a look at it. VIX was up to 41 level back here on Friday. Today with the market gap down and the VIX dropped to 28. It still is way out in the tag, is tagging the band really hard, and it's way out there, more 1 or 2 standard deviations out. The VIX is still very high because compared to about what it was here in back in July and so when the market was rising. And so the more the VIX moves towards the band, center of the band here towards the mean and towards this line, the better it gets here. And let's take a look at 2-year chart on just very quickly 2-year chart on VIX and change the studies here. This is what it looks like in 2-year. Band is tagged here, VIX coming down and then it's shooting up here to 40. And let's put a McKellen oscillator on VIX and see all the data that we can. This is what it looks like. Extremely overbought in the VIX condition. McKellen oscillator is reversed, so it is minus 300. Also extremely overbought conditions. And this is a 2-year chart that we had a slide in the wicks to the mean teenies here, mid-teens, and now we are looking at ranges here. That is what is producing a great amount of swings in the market, triple digits moves here and there, and that is what it is causing. This high amount of wicks, the volatility, is causing. This is a 2-year chart of S&P 500. The McKellen oscillator has a hook today. It moved down, crashed here, minus 300. Anytime this tool has gone below 200 levels, a reversal has followed, and I'm sure this is a reversal that is following here. Extremely oversold conditions here at 25 on the stochastics, and as a result, there was a technical bounce, and it just did what it's supposed to do. It went up 48 points. The market was up. Actually, this is a technical bounce because you look at it in Bollinger Bands. So let's put a Bollinger Bands on it, and you can see the S&P 500 was way out of this bands, and when it tags this hard, there is definitely the commodity moves right back into towards the mean of this thing. So it is moving up and it's moving towards the center of these bands, and that's what it is doing here. It is a technical trading bounce, whatever you might want to call it. That's what it is. And let's have a little bit time here today. Let's put some studies here and take a look at the stocks, what it did today here. This is the chart of S&P 500 2 years, and I'm going to go up to move it here to close to 6 months, and let's take a look at it, what this has been doing. As you can see, these red candles were followed by the April 30th charges that were started on Goldman Sachs. Greece problems were included in here. 90% was something else. Wall Street facing an overhaul. 10% maybe Greece. And I just believe that this cannot be accelerated at this much. What it did here on Thursday, it went below the 200-day moving average, recovered here, digested that recovery, and now we're in the recovery phase of this plunge. Hopefully, if we close S&P 500 over 1170, the market is going higher. This is where the real battle between the bears and bulls is going to take place, and the shorties and the bears are going to attack this index right here, 1170. They're just going to try everything to push it back down. But if there's a powerful force here, as supported by the PPT plunge protection team that is in place, as you know, and that may definitely carry this thing up. The administration and the Treasury Department has a lot of interest in keeping the stock market up, and you better believe it, in this election year it's going higher. The fundamentals are also behind it, and the sail in the winds is there. So those who try to oppose this market, and there was a lot of short covering here today, a lot of short covering, and they will probably not be able to succeed. So anyway, let's go take a look at it very quickly, the chart on Google. And Google just, this was on a descending channel, made a high, and then broke out here from this pattern. This is a descending channel, is a bullish pattern. When the commodity travels there nicely in this tight range trading and goes there, makes a bottom here, this was inevitable. And